don't get a good idea of really what's happening inside of the market here. So I don't really operate off of line charts, right? But honestly, for those who do like it, it is a better alternative than candlesticks. Here's my main grip, and this is what you guys are gonna walk away with. When I'm done training you on renkos, you're gonna realize this is where you want to really have your mind, your eyes towards to, because this is gonna start on just this chart right here. All right, guys. So as you guys see the market, I've never met a trader. Right? You're trying to get away from all the choppiness. When you go to line, right? How many of you guys get wicked out? Like USD CAD last Friday with NFP, right? Look at that. Look. That's why I don't care for NFP. You got a big wick down, then came up. Look at all these sellers right here. All these people who sold right here, right? And then you got caught up. You're not going to get that when you're trading other forms of candlesticks. All right, guys? You're not going to get that. All right? You're not going to get that. So that's the beauty about when you switch off of candlesticks. Now, you also have area. Nobody really trades off area. Nobody trades on baseline like that. The main ones most people like, again, candlesticks, Hakanachi. I don't see anybody really trade hollows, line charts. But this right here, this is my all-time favorite. Renkos. All right? So if this is your first time seeing renkos, this is what renkos look like. Renkos is a different form of candlesticks. To me, it's the best form. The reason being is that it focuses on pure price. All right? You see that? You see the difference between this and candlesticks? So I have my renko charts here, and we're going to bring up candlesticks over here. Let me see if they'll let me do that, right? So, boom. Look at that, right? This is USD CAD on the 1 hour time frame. Look at that. 1 hour time frame. Look at how it looks on candlesticks compared to USD CAD on renkos. You guys see that? You see the big difference? Do you guys see that? You see the big difference between candlesticks and renkos, right? Look at this uptrend right here. Right? Look at how the market went up right here. All this consolidation, right? Got a little choppy up here, right? And then look at renkos. Just a clean up move. Just a very, very clean up move, right? Big difference. All right? So renkos, you know, just a little back history. It was created by the Japanese, right? And basically it consists of bricks, right? That's what these are. These are bricks, all right? And basically it allows you to see the market a lot more clearly, right? Very more clearly compared to candlesticks, okay? Now, it basically singles out all the noise. So unlike candlesticks, renkos doesn't factor in news. It doesn't factor in, you know, Donald Trump tweets and all that other stuff. It doesn't factor in, you know, time, right? So guys, pay attention. Once we get to like 10 o'clock, unless a big move happen, this renko bar will stay the way it is. So every 1 hour, or matter of fact, check this out. Let's go to the 1 minute just to show you guys. All right, I'm gonna move to the 1 minute time frame. All right, boom. So it's 9:16 right now. When it gets to 9:17, you're gonna see another candlestick form. When this gets to 9:17, another red brick, another brick is not gonna form. You see it forming on renkos. You see how it's you know, trying to form. So you see right there. You see 9:17. You see how that renko candlestick went back up, and right over here, nothing, right? Renkos doesn't factor in time. It only cares about price. So you know why it went from, you know, light gray to about to form to dark gray, because it didn't reach the next renko bar. And that's how renkos are formed. They're equivalent to each other. Every renko must be equivalent to each other, right? Every renko. So In order for this renko to form another red brick, it has to come to 134,298. It doesn't care about the 1 minute time frame. All it cares about price. Right over here where it's playing right now, it's trying to figure out where are we going. We're either coming right back up to 134,324 and we're going to stay there and hold price, or we're coming down to 134 around 298. It doesn't care. So you see, it's now 9:18. You see how another candlestick formed on the 1 minute time frame, and nothing formed over here. Nothing formed over here. So Renko's only cares about pure price, right? It only cares about pure price, and that's what I love. I want no noise in the market. I want nothing but clarity. So for all you guys who've always wondered, how come I don't care for the news? How come I don't worry when news come out? That's why, right? So behind doors, this is what I look at, right? So I'm basically sharing to you guys what I really do in the markets, right? So I'm trying to get you guys to that next level. And for all those who are brand new, I'm going to say this again. I always appreciate the love. So you see right now, you see how this candlestick, real quick, I got kind of cut off, but you see how USD CAD is dropping. You see what Renko's did right there? You see how it's dropping? You see how it's getting to every level now? Right? And it has to stay there for a period of time before it becomes solid. You guys see that? Right? You guys see that? You all see that? Look. You see that? It has to get to these levels. Renko does not care about the time. Right? Renko doesn't care about the time. It only cares about price. So as long as price is dropping, then a Renko brick will form. It doesn't care about the time. It doesn't care about the news. None of that. Right? You see why? You see how this is coming down strong? So now this is coming down strong. Right? That's the only way you will get a Renko brick to form. Right there. All right? Like I was saying before, so for all those who are brand new, again, I appreciate the love. Thank you very much. I know your upline, whoever recommended you. This is an advanced course. This is an advanced session. So I don't go over beginner stuff. I don't go over like what's a pip. I don't go over, how to really draw a trend line and all that stuff. That's in IML Basics. That's in IML Academy. That's all over there. We're now really entering the advanced stuff. This is for all the people who've been following me over the last, basically going on 2 years. You're now ready to take your game to the next level. So this is more advanced trading. All right. So as you guys can see, Renko's only cares about price, all right? So every brick, it'll only form once it's equivalent to the next brick. So somebody says, well, what does each brick equivalent to as far as pip countage, right? Well, again, only price. So it's only thing for the next brick to form, we got to get here. You see how right now it's not dark red? It has to get dark red until it gets to the 134,261. If it can't stay there, then guess what? It's going to retrace. It has to stay there, and boom. That's how you get the next brick. Only cares about price. It doesn't care about anything else. Only cares about price, right? So equivalent to every single brick. Every single brick. Right there, right? You want to know, when will it get to the next brick, right? So this brick can be, 40 pips, 30 pips, 20 pips. As long as it's equivalent to the next brick, the brick next to it, that's all it cares about. So what I mean is this candlestick right here, right? So right here, this long candlestick, this was about 3 pips. This was about 3 pips, right? The next candle was about 2 pips. As you guys can see here, different volume of candlesticks, different sizes, right? One was 3, the next one was 2, the next one after that was, 1.2. Renkos does not care. All it cares is about price movement as long as it gets to that next target. So if this is going to come back up, it has to get back up to 134,289. You see how this is coming back up? For this to get back up, it has to come back up to 134,289. Then the next level, 134,298, and then so on and so forth. All right? Now, what you guys should also notice. Let's take this off. Go back to 1. What you guys should also notice with Renkos is not every Renko has wicks. Do you see that? Not every Renko has wicks. Right? That's another thing. Why is that, Steve? Well, because most of these are basically price. Usually caused by news, caused by some type of fast movement in the market. So when that usually happens, for example, like on UCAD during NFP last week, right? We had a sharp, was it Friday NFP? What was NFP? I'm trying to show you guys. So where was NFP? Friday 8th. All right. So usually you'll get it during news events. 8:30, right? I haven't been up for NFP in forever. 8:30. There we go. So 8:30. All right. So usually when you have a news event, so this was NFP last week, right there. So usually when you have a news event, you will about 9 out of 10 you'll get bricks with wicks that will form, right? Those are like your fake outs. Those are your fake outs. I'm on the 1 minute time frame. All right, so those are usually your fake outs. 9 out of 10, this is where the big drop started from. All right, and what's great with Renkos, you guys should see something. What do you notice you see a lot better? Anybody want to take a wild guess? I'm gonna get to how you mark it up and everything. I'm teaching. All right, so guys, this works. First, I have to explain to you how this. This is the very first time you're even seeing this, showing this. But again, for those who know me, flags a lot clean. No, I've shared Renkos with you, right? So this is something where I'm going to get deep into, and I'm going to show you guys how to properly utilize. All right? So, yes, flags. You see flags a lot cleaner, right? You see those patterns a lot cleaner, right? Impulse, correction, continuation. Correction, continuation. Correction, continuation, right? Correction, continuation. All of those things, right? Those reversal patterns, right? Boom. All of those things. All of those things, guys. Flags. Right there. Boom. All of those things right there, guys. Flags. Right? Look at those clean moves up. Correction, continuation. Right? That's the beauty with Renkos. Everything much more clarity. A lot more clarity. You see this clean uptrend right here? Look at all the flags. Look at all the flags. No confusion. Would you rather look at flags on this, or would you rather look at flags on candlesticks? Right? Now, don't get me wrong, I can do both. Right? But for the most part, it takes a while for people to see flags on candlesticks, right? It takes a while. It's a process. I will admit that, right? So if I identify this uptrend here, what looks clearer as far as a flag? This? Or I'm on the 1 minute over here, or does this look clear? Right? Or this look clear? Or this look clear? Or that looks clear? Right? Which one looks clear more as a flag? That or that? Right? So, and that's the point of Renkos. It brings that clarity to the market, right? So, you see what happened with this wick right here? Because it wicked out over here, so you got one forming right here. So you guys are seeing it. I'm on the 1 minute time frame because Renkos moves a lot faster on 1 minute. One thing I will say, one little drawback about Renkos is you have to be patient. These bricks do not form every other second like candlesticks do. All right, they literally take time. And for those who trade Renkos, you know if you're trading on the 1 hour, the 4 hour, any of those time frames, it's gonna be a while before you actually see a Renko brick form, right? So if I go on the 1 hour time frame, matter of fact, I go on the 4 hour time frame. Check this out. Look, you see here, you got your drop, right? This is the 4 hour on USD CAD. You got your sell. This whole time, not even attempt of a red brick. No attempt to come down at all. None at all. Over here, boom, come down everything. Not one attempt, right? Because all it cares about is pure price. Because over here on the 4 hour time frame, price did not get to this level. 133,847. Price did not get there. So because price didn't get there, there's no need for a brick to form. It only cares about pure price. All right. So now, how do we mark this up? How do we use this to our advantage? Right? How do we make this powerful? Now, you can do one or two things. Now, some people, what they like to do is they like to mark up on candlesticks. So, for example, they'll go on candlesticks. They'll do this. They'll mark up on candlesticks. And then they'll switch over to Renkos, right? So, for example, this breakout right here, right? So this breakout right here on candlesticks, this is what most traders do. With Renkos, they'll literally watch for green bricks to form above or below their candlesticks here, right? So I'm not selling until a red brick gets under my trend line here. I'm not buying until a red brick gets above my candlestick here. Whereas, Renko here. Whereas candlesticks, remember, you get all the fluctuation. Look at the fake outs, right? Fake out right there, fake out right there, fake out right there, right? Until the breakout finally happened. All right? I switch back. You don't have to worry about no fake outs. Again, unless it breaks through your trend line, you'll know as a confirmation. So when we bought, we didn't buy until we got a red brick broken above our trend line. All right, we didn't get caught up. Let me keep the two screens on so you guys can always see. So you got that right there. And where is that? Let me put this over here. So we didn't get caught up with the fake outs, with the wicks, right? How many times do we buy or sell because price seems to be moving up aggressive, keeps moving up aggressive, keeps moving up aggressive? Here, clarity. That's one thing about Renkos. You know whether you're going up or whether you're going down. Now, how you mark up is pretty much the same way. Pretty much the same way, guys. No difference here. How I mark up candlesticks, same way. So if I want to identify this uptrend, I'm starting from the low and I'm bringing it across. If I want to identify this entire downtrend, I'm starting from the top and I'm bringing it down to the low. Right? Same way. No different. This uptrend, this downtrend, this uptrend. Boom. This downtrend. Boom. Right? It's the same thing. Boom. That uptrend. Boom. This big downtrend right here. Boom. Right? Same way. Same way. Right? And I can buy and sell when price is breaking and going above or below my trend lines. All right? Same way. Nothing different there. All right? So now, how can you use this to your advantage when trading? How do I take advantage of Renkos now? I know it's not just this simple, right? Actually, it quite is, right? I have a few people who just literally trade Renkos and, you know, they just wait for certain areas and then bada bing, bada boom. But this is where you can utilize the MACD, which is my favorite indicator. And then you can utilize one or two moving averages. All right, just one or two moving averages. So, and we're gonna back test it. The only thing is, when you're back testing Renkos, you can't use the replay button. The replay button, unfortunately, on TradingView only applies to candlesticks. It doesn't apply to Renkos, right? Because you gotta understand, it takes a lot to create Renkos. Renkos are not as easy as candlesticks. Candlesticks, the coding for candlesticks is simple. The coding for Renkos is not the same. All right. So, you guys know I love the MACD. Boom. Now, if you notice with the MACD, again, you still get that a big difference as opposed to the MACD with from Renkos to candlesticks. Now, look at candlesticks and look at Renkos. You guys see that? We're both on the 4-hour time frame. So on candlesticks, on your MACD, price is telling you to sell. On Renkos, price is just crossing over through your histogram. MACD crossover, right? Candlesticks, signal for sell. Right? Big difference. This right here, big difference. On your MACD on Renkos, big uptrend. Your MACD on candlesticks, it's telling you, hey, we're in an overall uptrend, but we're getting ready for a sell. Now, you know my rule of thumb. When it comes to utilizing the MACD, you only buy or sell when what happens? We only buy or sell until we get that zero line crossover, that MACD crossover, right? We don't buy or sell until that happens, right? You guys know that, right? We don't buy or sell until you get that MACD crossover, all right? So now, I have my MACD indicator here. Boom. Now, if I'm identifying this downtrend, right, and I want to look for a buy, I'm ready to get in for a buy. And this is how simple and easy using Renkos can be, right? So once you identify your trend line, now you got to keep in mind, when you guys are drawing trend lines, the reason why I draw trend lines so much, that's another confirmation. You do realize that, like when price breaks through these trend lines, that's a confirmation. That's a signal, right? So you see how price broke this trend line here, and look at your MACD. Now we are shifting to a downtrend, right? Look at this right here. every time flags are being done, all I gotta do is wait for a red brick to form. Just all I gotta do is wait for a red brick to form. Just like when I'm going on this uptrend right here, all these flags, all I gotta do is wait for a red brick to form. So if I wait for a a green brick to form. So if I'm waiting for a bullish flag here, so price is pulling back. I wait for a green brick to form. Wait for a green brick to form. And then, look, my stop loss is right below that flag right there. Every single time, right? I got a pullback. Green brick forms. My entry is here. Stop loss right below the red brick, the previous red brick. Stop loss here. Every single time. For every flag that you see. Flag, flag, bigger flag, right? Because unlike candlesticks, you're not going to get misinformation. Sorry. I got to bring this back up. You're not going to get misinformation. So over here, boom, that same area, right? This is that same uptrend from here all the way up. Look at all the flags here, right? If I told you with candlesticks, buy when a bullish green flag forms, you would have bought here, you would have bought here, you would have bought here until price finally broke out, right? If I told you, oh, you're getting another pullback, buy every time a green candlestick forms, you would have bought here, you would have bought here, you would have bought here, you would have bought there, so on and so forth. With renkos, one time, right? That's the beauty with flags. You're not selling, so like this bearish flag right here, I'm not selling until a red brick forms. One red brick. And the moment it forms, my entry is right here, my stop loss is right above. And then I get this whole down move with clarity. With clarity. Right? No confusion. No confusion at all. Right? And you're seeing it every single time. Every pullback. Right? Every pullback. Every pullback. Until price change of direction. Now you got your bearish flag. Now you're waiting for a red bearish brick to form. There's your entry. There's your stop loss. There's your entry. There's your stop loss. Another brick. There's your entry right there. You wait for that brick to close. There's your stop loss. Right? Until price changes. And then now you got change of direction. Right? Pretty simple. Everybody understand? Not hard, not difficult. So when you're wondering, oh, Stevenson, when does this flag end? Right? Everybody's always asking, when does this flag end? I just switch over to renkos. Right? How many people said they caught the Great Britain, New Zealand? I heard a lot of people say they caught Great Britain, New Zealand. I caught Great Britain, New Zealand. I caught Great Britain, New Zealand. All right, perfect. So there was a small flag before that sell setup, right? If I'm not mistaken. Right over here, let's go on to a 1 hour time frame. Let's get a nice flag. So perfect. We're on the 1 hour time frame. So you see your flag right here? Everybody see that? And then you see your downtrend. So you see that flag? This is this flag. So what's better to watch? All these candlesticks going up and down, up and down, up and down? Or you got two bricks and then you just wait for a red brick to form. So now my sell is here, my stop loss is here, and guess what? I catch that same downtrend. I catch that same downtrend. There's my flag. I wait for the red brick instead of watching all these candlesticks go up and down, up and down, up and down. Right? Instead of watching all of that. Up and down, up and down. That's my flag. Boom. I just wait for a red brick to form. I get my entry there. Stop loss above. And then, boom, you move to the same downside, right? I don't have to worry about all this choppiness, all this up and down, driving me crazy. All right? You can use this on any time frame, guys. You can use this on any time frame. If I haven't said it before, I'll say it again. Whatever you do on one time frame, you can do on all time frame. Guys, the rules do not change. Right? Nothing changes. How I taught you how to trade on candlesticks still applies. The only difference is now you're just looking at, instead of candlesticks, you're looking at it from a renko standpoint. That's it. That is it. That's all you're doing, right? So you see all your patterns, all those things right there. Now somebody asks, can you put alerts? No, unfortunately you can't put alerts. You see right there. Your alert won't trigger the way you expect it to. Inputs for ATR, the way it's recalculated, it's too much. So you can only put alerts on traditional charts. So you saw what they said there. So if I say add an alert, it won't. Right there. That's actually not an alert. So if I say add an alert right here, it's not going to do it. Right? So please use traditional chart to set up your alert. So that they're saying basically I would have to go to candlesticks to set up my alert. So that's the one drawback with renkos, right? You got to kind of babysit them a little bit more, but it prevents you from jumping in and out of the market so much, right? Now, to make your life even more simple, if you want, you don't have to do it. Again, same way. So somebody was asking about the MACD. Again, the rules still apply, right? So for that sell on GN, right? My rules always jump down 2 time frames, right? Kind of like on bounce back, right? If I'm looking for a sell, right? So right here, this is a bigger flag, right? Same thing. All I'm waiting for is my MACD crossover. See that? And notice, when you got your MACD crossover, look where it's crossing over at. Right there. That's your breakout for a sell. So Renko's actually goes even better. Remember, whatever indicator you're using, it goes well depending on how you analyze the market. Depending on what's in front of you, that's how strong this MACD indicator is. All right, that's why I keep comparing it to a calculator, right? If I give you a calculator based on the information you know on mathematics, will determine how strong the calculator is going to be to you. But if you're a complete idiot when it comes to mathematics, then that calculator has no use to you, right? You might as well throw it in the garbage. So, for example, you see here, you see all these red bricks right here, all these red bricks, red brick here, red brick here, red brick here, right? Red brick here, red brick here. Look at all these red bricks. Red brick here. Right? Look at all these red bricks. Red brick here. What do you guys notice about your MACD with all these red bricks? All these red bricks. All these red bricks. Right? No MACD crossover. See how you put everything together? See how you put everything together? Even this red brick right here. Red brick here. No MACD crossover. You didn't get the MACD crossover until right here. So that's your entry. So my entry is here. my stop loss here. On the 15-minute time frame, and guess what? I catch this move to the downside. Boom. 300 pip move to the downside. Right? So again, the rules still apply. They still stay the same. Right? Nothing changes. Nothing changes. All right, guys? You're just now, instead of looking at candlesticks, you're looking at pure price. You're looking at renkos. So now you have your clarity. So now, guess what? When I'm in an uptrend and I'm looking for my bullish flags here, look, when I look at my MACD, I want to make sure, oh, I'm above my histogram for a buy. So all I have to do is wait for a green brick to form. So green brick form here, stop loss here, uptrend there. Wait for another bullish flag. I'm above my histogram. All I got to do is wait for a green brick here, stop loss here, buy. I could not sell here. I couldn't sell these because I was not below the histogram. So I do not sell these. I do not sell these. I do not sell these. Look where my histogram is. Look where my histogram. You see how I'm above? I'm above. I'm above. I don't get in for my sell until this has come back under, right? So now that I'm back under, now I can enter the market. Now I can sell. Now this is a clean sell. Now I can get in. Right? Same rules apply. Nothing different. Nothing different. Right? Nothing different at all. So my analysis on this uptrend doesn't change until pretty much price breaks my trend line. We start to dabble around here. That's when I would probably exit my position. Right? But again, the way you mark up the charts, the way you already analyze, everything stays the same. The only thing you're doing now, you're switching over to renkos for more clarity. And that's what you want. You want more clarity in the market when you're trading. So now you guys are not stressed out. Now you guys are not going crazy. All right? Okay, guys. So this is what I'm going to do. I'm going to spend about 45 minutes to an hour every session. We're going to cover renkos. And anytime we see a setup in the market, I'll switch over to renkos. I'll start incorporating more on my weekly sessions. But I want to get through all the currency pairs you guys are waiting for. You're looking for the setups. I want to bounce back to that. So this is what we're going to do going forward. I'll be covering renkos over the next few weeks. After that, we're going to switch over to Fibonacci. All right. So I got some great information, and I'm going to show you guys how to properly utilize Fibonacci. So you guys who love, that tool, you're using it correctly, right? You're using it to the best of your ability. You're not, thinking, oh, because it hit the 50 extension, yeah, price is supposed to drop or it's supposed to go up, right? That's not how Fibonacci works, right? There's tricks, there's rules. Well, it's not tricks, but there's rules on how you use Fibonacci the correct way. So I wanted to break down basically, guys, how I use renkos, why it's important to me, why I love it so much. And now you see why other traders who do utilize renkos, why it's so important. All right. So every week, next session, we'll spend about 45 minutes to an hour. I'll break it down and I'll show you guys how to incorporate even other indicators and tools to make this even more powerful for you. Right. So next session, I'll go over how to incorporate moving averages with renkos and how to make it more popular. All right. I don't want to overwhelm you guys with too much, right? Renkos, anytime you learn a new subject in Forex, it can be a lot, right? So you want to take them in portions. You want to take them bits and pieces, all right? So when this session ends, you guys have this recording for renkos, right? And then you're going to have part 2, and then part 3, part 4, and then so on and so forth. All right, makes sense? Everybody get that? Perfect. All right, so now IML TV begins. we can finally get to all these pairs. So you see right here, and this is a perfect example. So you see how I'm on Renkos on the DXY. So you see this flag, wait for bullish flag before buying. So you see that? So just to give you an example, so I'm waiting for a bullish flag. So instead of watching this on candlesticks, right? This is going up and down, 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 right? You got this big flag right here off of candlesticks. If I switch over to Renkos, look how the dynamic changes, right? I have a pullback here on my MACD. So look, I'm not buying until I get my MACD crossover right here, right? So you see how my blue, my MACD line goes back above my orange line and then it begins the uptrend? It begins the uptrend. You see that? And then that's when you got your clean buy right there, right? So when a green brick was forming over here, I didn't buy. Look at your histogram. It's telling you we're basically going down. We're in a downtrend, right? Look right here. Look right here. Not one time was your MACD line above your signal line, right? We didn't begin the strong bullish momentum until over here. And this is where you got your uptrend. So you see how powerful Renkos can be? How much helpful? All right? And that's why I utilize it. That's why it's one of the best tools I've ever used. And you should consider using it too. All right? So just another way to analyze the market. It's very helpful. I love it. And I'm pretty sure a lot of you guys will love it too. All right, so let's get to it. Boom. You got your clean sell to the downside. Until you see flag on candlestick. 4-hour bearish flag on candlestick. Yeah, 4-hour bearish flag. See that? But when I switch over to Renkos on the 4-hour, it's not there. It's just a bearish brick. You go down another time frame. You go down to the you keep going down time frames until you see that flag. So boom. There we go. I'm on the 15-minute time frame. So I had to go all the way down because I told you Renkos carries so much price that it's not going to keep creating bricks like candlesticks. It's not going to keep creating a candlestick after every time frame, right? So there's my flag. Boom. So remember, just because you have a red brick here, you have a red brick here, you have a red brick here, doesn't mean you sell right away, right? You still need your MACD crossover. This is where the downtrend began. Once it began here, this is the area you want to look to sell. Area of entry. Boom. And then you got your clean sell to the downside. Boom. So now you have another flag forming, right? If we're going to get this drop right here, you watch this on the 15-minute, and you need a MACD crossover on the 15-minute on Renkos. Right there, right? I'm not selling just yet. I need to see this come back under, just like this. See how that dropped, which led to that drop? I need to see that here. Once I get there, then I can sell. But in the meantime, on the 15-minute, we're going up. All right? Boom. So what am I looking for on Euro USD? Yeah, so Euro USD. I think I'm all right. This whole thing right here, I'm looking for a reversal. All right, I'm looking for a reversal. We could get one more move down. I'm looking for that. I'm still looking for that long term. Long term, that's my analysis. That's my long-term analysis. Buy. Long term, I'm looking for that. Big buy on Euro USD. So you want to start looking for buy positions. All right. Anytime I can get a buy from the low, I'm going to try. All right. Now, I think there's going to be one more drop. Right. You got your impulse. Gain your flag. One more drop. And then once it hits the bottom, then we're going to look for reversal. So watch the 1 hour time frame. You got a bearish flag for me. For one more drop. Bearish flag for me. For one more drop. Watch that. So again, guys, please pay attention when I'm going over all this stuff. So in that situation, again, if you're looking at Renkos, once I get my MACD crossover here, right? So wherever that happens, my stop loss would be right above there, right? So let's say it crossed over here. My stop loss is there. But if this comes back up, then remember, I'm not entering. Right now, what you're waiting for, you need a MACD crossover. You have no MACD crossover right now. No MACD crossover. So there's no buy or sell. So in this case, there's no stop loss because you have no entry, right? If you're not in the market, how can you place a stop loss? No stop loss, no entry. But for argument's sake, let's say you had a MACD crossover, your stop loss would be above that high. All right? Boom, boom. All right. Let's get through this. All right. Great Britain USD. All right. I'm bearish on all these Great Britain pairs. The only one I'm probably not is GU and GJ. I'm a little concerned about, but if everything pans out accordingly, we should still get this drop. So we don't need all this markup. Just basically watch this. Right? Watch this. I don't see this going back up again like that. I don't see that one more. Right? It could happen. There's that possibility. I would still be looking for a sell. But what you want to watch is a bearish flag here. Right? So we want to wait for a bearish flag here. All right? That's what we need. We need a bearish flag. You get a bearish flag, you can sell. Just wait for that. You get a bearish flag, you can sell. Bearish flag before selling. All right, I love all Great Britain pound pairs. All right, I love all Great Britain pound pairs. Those you guys should have. Again, I so buys. Right. More you If this goes up, this will definitely come down. So if we got that big uptrend for Euro Great Britain, we're gonna get a big downtrend for Great Britain Swiss franc. All right, we'll get a big downtrend for Euro Great Britain, Great Britain Swiss franc. All right, so keep these two on your radar. All right, keep these two on your radar. All you got to do is wait for that flag. Right, bearish flag, and then you're good to go. Let me get a nice bearish flag pattern so you guys know what to look out for, and then you're good to go. What's up? How's it going? UK in the house. Houston. I we're gonna told you they come, right? Market structure is everything. All right, let's begin. All right, so renkos. All right, make sure over here candles. You're gonna switch from candles to renkos, and the reason why we do that again, candlesticks, which is where majority of people start from. It's a form to analyze the market. The problem with candlesticks, they fluctuate too much, right? You got too much price movement, too much volume, too much noise, right? Because candlesticks factors in everything. It factors in the news. It factors in volume. It factors in the time. It factors in all these things that makes candlesticks very, sporadic. Shoots up and down, up and down. That's why you got spikes all over the place. All right. So last session on Sunday, we switched over to renkos. So as you can see, looking at renkos is a lot cleaner, right? Renkos looks a lot cleaner. You can see the market a lot better. This is actually my preferred preference of trading. When you trade like this, you pretty much can catch anything. You catch the up move, the down move, whatever it's doing. All right. So today, what are we covering? Today, we're going to use other indicators to make your life a lot easier when it comes to trading renkos. All right. So I told you guys pretty much the basics, right, of how renkos work. So again, quick recap. All right. And I'm not going over everything I did on last session. That was for last session. So again, if you didn't catch last session's webinar, please go watch it. All right. Because that will take me another whole hour. I don't want to be on IML TV for 3 hours, right? So I want to move on to the next part. What I will probably do until the new educational platform comes, I might do a series on YouTube where you guys can catch, because IML TV only covers what, I think 6 recordings, right? Somebody quote me. I've never actually gone back on my own recordings, believe it or not, but I think it only saves about 6, and then after that, a new 6 and a new 6. So basically, eventually, these renko recordings are not even going to be available. So what I was probably thinking, I'll probably do a web series on YouTube, but I probably don't want to do that because that's going to be available to everybody in the world. So I got to figure out, maybe talk to our programmers, find a way to just save specific sessions so you guys will have there. I really can't wait until September. I can tell you, we're coming and releasing a whole new way of learning and doing courses that's going to be a lot better and educational for you guys. But I'll figure it out. We'll find a way. So they do, Grant. Your coins go back. Oh, for 6 months. Okay, all right. So I thought it's not the last 6. So 6 months. All right. So there we go. So all right, that's perfect. And by the time we get to the releases of the new stuff, all right, we'll have everything in a package. All right, so perfect. So yeah, if you didn't watch last session, go watch last session. Today we're gonna utilize implementing other things to make identifying trends with renkos a lot easier, right? So again, renkos is pure price. All right, it lets you see the uptrends, the downtrends a lot easier. Not only that, it only cares about price, so it doesn't factor in time. So a 1 hour candlestick, I actually showed you guys an example on the 1 minute. 1 minute can pass, right? Right now it's 10:14. So when it turns 10:15, like it just did now, if you notice, a new brick didn't form, right? If I switch over to candlesticks, a new candlestick formed. Right, so that's the difference. So Renko's only cares about price. So in order for price to move, it would have to get to this range. Right, let me zoom in real quick. So it would have to get all the way up here. And then for the next brick to form, it would have to be equivalent to here. And then for the next brick, up here. And then so on and so forth. So that's how Renko's work, right? It only cares about price, not time per se. Now, I actually got a good question on Instagram. Somebody asked me, well, all right, cool. I know that Renko's doesn't factor in time like that, but when you are on different time frames, the structure of the market is different. Yes, absolutely. And what's different is the amount of price point. So, for example, on the 1 minute time frame, it doesn't take a lot to move this Renko, right? So if you think about it, it doesn't take a lot for a Renko to move on the 1 minute time frame, right? Because remember, every brick is consists of a certain amount of pip pointage. When you go, let's say on the 4 hour, it's going to take a little bit longer, right? So you see how on the 1 minute, all price has to do is get to 96.98, basically where price is. So if it holds, this will become a solid brick and start going the opposite way. But when I go on the 4 hour, in order for price to form a green brick for an uptrend, it'd have to get all the way to 97.27, right? So that's the difference, right? So the higher the time frame, the more amount that price must move in order for that brick to form. All right, makes sense? So the greater the time frame, now I need more pips to form in order for another brick to form, and another brick, and another brick. And the higher the time frame you go, the more amount of pips you need, right, for that price to move. So that's that there. Again, it also, when you're using your MACD, a lot cleaner, right? So if I identify this uptrend here, when price turned, breaks here, you notice you got your MACD crossover, right? But it's not just that. Remember, you want to have multiple confluence when you're trading, right? Now, those who don't know what confluence is, this is having 2 or more confirmations, right? And a lot of traders use confluence when they're trading. They factor in, whether it's indicators or, news outlets or whatever the case may be. You want a number of factors to influence your decision, right? So one of them for me is the MACD, right? Another one is when I utilize my trend lines, right? And then something you guys can do is you can utilize a EMA, right? So let's say I use an EMA. This helps me soothe out price. Now, when it comes to EMAs, I've talked about this in the past. Now, what makes EMAs unique and why a lot of traders utilize them is because EMAs kind of, one, it's for starters, it's pretty simple. Let's strengthen this. Let's make this yellow so you guys can actually see. All right, I want yellow, red. Let's make that red. so you guys actually see. Everybody see that? Red, boom. Everybody see that? Red, perfect, good. So for starters, it's easy to use, right? It's an indicator. It's one of the most popular indicators. A lot of traders utilize them. Some of your favorite traders out there utilize them. If you watch whoever you guys watch, Oren Wright, Lex Waves, Christopher Derrick, whoever, they might use moving averages. And it's a very common thing for traders, just traders universally, right? And again, you guys should know, overall, when price is above the moving average, you're looking to buy. When it's below the moving average, you're looking to sell. Now, remember, what type of indicator is a moving average? Does anybody know? Real quick. Does anybody know what type of indicator is a moving average? I've discussed this. Let's see how many people are paying attention. Lagging. There we go. Good job. Lagging. So it's a lagging indicator. So like all lagging indicators, and for those who don't know, lagging indicators basically, you know, by the time this EMA gathers information, that's what it's doing. That's what this indicator does. It's gathering previous price action, right? Previous price. It's gathering previous price, right? So that 9 you see right there represents the last 9 trading days. So it's gathering the last 9 trading days in order to calculate what price is going to do right now. So the thing is, when it's gathering those information, it's kind of late to the party, right? Well, it's not kind of, it is late to the party, right? So if you've ever used if you've ever used a moving average, you know you're late to the party, right? So that's why it's called a lagging indicator. And the best time to use a lagging indicator is when it's in a trend. That's the best time to use it, when uptrend or downtrend. That's the best time you want to use a lagging indicator. The worst time to use a lagging indicator is when it's in a trend, right? So when it's not a trend, but consolidation. So for here, for example, let me find a nice consolidation. So this is perfect right here. See that? So the problem is when you're in consolidation and you're factoring in a moving average, notice when price goes above it, you're looking to buy, then it goes back below, then you sell, then it goes back above, then you buy, then it goes back below, then you sell, then you go back above, then you buy, so on and so forth until it gets out of that range, right? And consolidation usually that's the time period that drives most traders insane, right? If you've ever traded in consolidation, you've probably pulled your hair, you've probably wanted to throw your phone, break your laptop, you know, that's a frustrating period, right? So that's the worst time to factor in your moving average. Now, keep in mind, when it comes to indicators, that should never be your sole purpose of your analysis, meaning that you should not be relying on your moving average. So I don't go, oh, I'm waiting to sell because my moving average is below my brick is below the moving average, so now I need to sell. No, right? We factor in the moving average, the MACD, the everything after we've already formulated our analysis on the market of what market structure is doing. So if I've identified this uptrend, for example, and then price breaks through my trend line, all right, I've already factored in, okay, market structure, we've broken through this trend line, we are now heading in to a downtrend. The fact that price is below my moving average just gives me further confirmation I am in the right direction. That's it. Your moving average is just further confirmation. It is not just sole confirmation. That's why we use it for confluence, right? Multiple confirmations. So I'm now below my moving average. I'm crossing my MACD. I'm feeling pretty confident in my trade, right? So for those who always wonder, how do I get better in my entries? How do I get better with my confidence, right? It's factoring in all these indicators, putting it all together, right? Multiple sources all together to confirm that your trade analysis is going to go in the proper way. So what you can do here now, when it comes to the moving average, again, length. Now here's the thing with length. Some people is different. Some people love the 200 EMA, right? That's a universal one right there. Now, the thing is, the higher the period, the stronger the confirmation, but the longer the lag, right? So you see what happened when I switched over from the 9 to the 200? Look, the 9 would have had me enter for my sell up here. Because I put the 200, it has me sell over here. So look at the disparity between entry here, right? 9 EMA, moving average over here. And then you got your 200 over here. Now, I'm on the 1 minute time frame. So from here to here, not too much, right? About 11 pips. But imagine if I was on the 4-hour time frame, right? Let's say I was on the 4-hour time frame. Let's say I was identifying this uptrend. So let's do that, for example. Let's identify a nice clean trend. So just to give you examples, so let's go back to 9, right? Just to show you. All right, perfect. So I'm on the 4-hour time frame. So I got my break plus my EMA is my brick is below the EMA over here. So this is my entry, right? So this is on the 4-hour time frame, right? Entry here. Now, look what happens when I switch that back over to 200, right? This wasn't a good example. Where's the break? All right, there we go. Because I'm already over there. What I'm trying to show you is the disparity between the two when you have a smaller one as opposed to a bigger one. So let's try this one. Let's say I do this uptrend here. So my entry would be right there. And then when I switch over to 200, so now your entry is all the way down here. So you see that? Because that will happen, right? Now look at the amount of pips between the 9 and the 200. Over 200 pips. That's a lot, right? So you missed out on 200 pips on the 4 hours. So you see the big difference? 229. Remember, the higher the time frame, the more these bricks carry weight. So you see how we went from the 1 minute, it was only about 11 pips. And then we jump on the 4 hour, and then the difference, once price crossed over under the EMA, it's over 200 pips, right? So big difference. So what do we do? Which one do I choose? Does anybody know? Do I go with the smaller one or do I go with the bigger one, right? Because like I said, I go with the smaller one, yeah, I'm going to get a tighter entry, right? But at the same time, I'm going to kind of be in and out of the market. Because if you remember, I put in this 9 here. Check this out. I'm selling and then I'm buying again. And then I'm selling again. And then I'm buying again. Then I'm selling again. With the 200, a lot stronger, right? I'm selling, right? I'm catching a little bit more pips. So I don't go above and below my EMA as much, right? Very rare. So I'm asking you, can anybody take a guess? Which one do I go with? The 200 or do I go with the 9? $200 is smarter. Anybody else? 200, 9. Both. Depends on the time frame you're trading on. Depends on the type of trader you are. Yes, I like that answer. Depends on the type of trader you are. Yes, that's right. 9 for entry. 200, both. All right, so good. Right? So I'm glad I got all those answers, right? None of you guys are wrong. All right, none of you guys are wrong. None of you guys are wrong. And one of the answers that I liked out of all of that is the what type of trader you are. Now, if you guys recall, I talked about this a few webinars back, probably I want to probably say a month, maybe 2 months back. I talked about being different types of traders. Now, real quick, right? This is all part of the lesson. You have 4 types of traders. Remember that. You have scalpers. You have intraday. You have swing traders. And you have position traders. Right? Those are your 4 types of traders. Scalpers, intraday, swing traders, position traders. Right? In the course of your journey of being a trader, you must figure out what type of trader you are. Right? Nobody really discussed this. Nobody goes over this. Right? We just go on IML TV. We watch all these educators. We use all these products. We use the harmonic scanner. We use bounce back. We use Gold Cup. We use all these things right there. Nobody actually identifies the type of trader they are. Why is this important? Does anybody know why this is important? Can anybody take a quick guess why this is important? Soka Skip. She takes some really good notes. I love that. February 26th. I love that. I love somebody who takes notes. Great job. Good job. That's right. Mindset. Risk tolerance. That is correct. There you go. Right? So you have to understand, we're all uniquely different as individuals, as people. Right? So we all have different mindsets. We're not all the same. And you guys know that. Some of you guys watch myself, you watch other educators, you have your favorite educators. Some of you guys are on my session, but you know, Oren's your favorite trader. Or Lusato is your favorite trader, right? Shout out to my guy Lusato. Always I don't know if he's doing a rap concert on his session or what. You know, I gotta find out one of these days. Anybody who's ever attended Gold Cup, Mr. Lusato session, I gotta ask you, is it a concert, or are you guys actually learning? I always try to, you know, somebody got at me and said, Steve, you don't play no music on your sessions. Well, my students paid for education. So let me know if you ever want a rap concert or do you want education. Yeah, I don't know the two. But shout out to my guy Lou, you know. He likes to entertain his people. But you have to figure out what type of individual that you are, right? So we're all different. Me and Lusato, we are 2 different types of traders. 2 very different types of traders. He's successful at what he does. I'm successful at what I do. 2 different types of traders. So depending on the type of personality you are will determine what type of trader and how successful you will be, right? A scalper can never survive as a swing trader, position trader, right? And vice versa. Because like me, I'm a position trader. I'm a swing position. This is where I fall into. I fall into swing position. I hate scalping. If you come to me and tell me, you know, hey Steve, I'm trying to catch 5 pips, I cannot help you. I cannot help you. I will never jump into the market for 5 pips, right? I couldn't do it. That is not me. And that's not the type of trader that I am, right? And you have a lot of people who are scalpers. It works in their favor. So you have to figure out the type of personality that you are. So the reason why I bring that up is these moving averages 200 and the 9 will help you, right? So the 9 is more so for scalpers, right? You can use it to position trade, absolutely, intraday trade, swing trade. But if you notice, again, it'll get you in much tighter and let you grab your quick 40, 50, not even 20, 30 pips. So if you're a person who's only in the market for about 20, 30 pips, my suggestion to you, and right before you get into the market, draw a trend line like I did here. Like, let's go over here where current price is right now. So this is the DXY. So let's say I'm identifying this subtrend, and this is how easy trading on Renkos is, right? You can literally take every single leg that's going up and down and draw a trend line on it, right? So this is the beauty, right? And we talked about it. Whenever you're drawing your trend line, remember, uptrend, I'm starting from the low and I'm bringing it up to the current high. If I'm doing a downtrend, let's say this downtrend right here, I'm starting from this high and I'm bringing it down to the low. Watch what happens when I go down one time frame, right? So now, 1 or 2 time frames. Let's say I go down 2 time frames, so I'll end up on the 30-minute. So now, check this out. Because I identified the singular up move, the moment price breaks my trend line and is under my moving averages, check that out. I got a nice clean entry, right? So I got, what's that right there? I got price breaking trend line and price below EMA. Check that out. See that? I got price breaking my trend line, and then I got price below my EMA. So now I can sell. There's my entry, and then boom. There's my 30 pip move to the downside for all my scalpers. For all my scalpers, for all my intraday traders, boom, there's your move right there. And you're done. You're literally done. That's it. Waiting for that confirmation, because that's the beauty with Renkos. Again, it identifies pure price for you. Scalpers. I got, what's that right there? I got price breaking trend line and price below EMA. Check that out. See that? I got price breaking my trend line, and then I got price below my EMA. So now I can sell. There's my entry, and then boom. There's my 30 pip move to the downside for all my scalpers. For all my scalpers, for all my intraday traders, boom, there's your move right there. And you're done. You're literally done. That's it. You're waiting for that confirmation, because that's the beauty with Renkos. Again, it identifies pure price for you. So you'll know whether you're in a pure uptrend, downtrend. You can do this all day. I can do this all day. 4 hour. I'm on the 4 hour. I can take this downtrend. I can take literally this uptrend. I can take this uptrend here. And I can do this all day. Go down to the 30-minute. Boom. This uptrend right here. Price breaks my trend line. Right? Price breaks trend line, and brick closes above EMA. Right? I got both my confirmations. Not only that, what do you know aligns with it? I got my MACD as well. I got my MACD crossover as well. I got a perfect order for a buy. Boom. Right? I got my 20, 30, 40 pips. Hell, I can go all the way up to 149 pips. You see how that works? You see how that works, guys? Right? My stop loss would be right below the previous low. This would be my previous low. That's my second previous low, right? Let's take this uptrend. Same thing, right? And this is all from the 4 hour. You see how you can break all this down in increments? So now again, I got my break of trend line, break of trend line, and price. So when I say price, I'm talking about the brick. The brick represents the price, right? Every brick represents pure price. So when I say price, I'm talking about the brick. All right, keep that in mind. So price closes below EMA, right? So look at all that confirmation you're getting. Look at all that confirmation you're getting. You got that, and you got your MACD crossover right here. So I'm feeling very, very confident. So not only do I have the break of my trend line, I have price below my EMA, and I got my MACD crossover. And what do you know? I got a nice 30 pip move to the downside, right? Now, if I understand market on a bigger structure scale, I can ride it out for much, much more. But just taking something as simple as that, right, and factoring in just a simple EMA, right? So whether I'm on a 9 EMA or now, let's say I switch this back over to a 200. Now, it doesn't have to be exactly 200. Let's say some of you guys use the 50 EMA or the 100 EMA, right? It's all relevant. It's all relevant. So you see how I use the 50 EMA? So let's say I use the 50 EMA, for example. So now my entry, actually 100 EMA. So now my entry is not here, right? My entry is not here. Now my entry is here. Now my entry is here, right? Check that out. Boom. So look at that. Entry here because I got a bigger, right? I got a bigger EMA. So I got the 100. But now look at my pip countage. Before, when I had it at the 9, right? Right before price came back up, my entry was around here. I had about 30 pips before it reversed and went back above my EMA. Now that it's at the 100, remember, the greater the EMA, the more amount of pips. Now my entry's here. Check this out. I got about, instead of just the 20, 30 pips, I got about a bigger move to the downside. I got about 80 pips. Right? I got about 80 pips. Right? So the bigger the EMA, the stronger the trend, the stronger the confirmation. Make that into the 200. Boom. Right? So again, it all comes down to the way you teach me does not matter as long as it becomes. So it all comes down to, again, type of trader you are, what you're trying to accomplish, right, in the market. That's why I'm showing you different variations. That's why I'm showing you, you know, whether you use the small EMA, whether you use the big EMA. It's all relative. It all works, as you guys can see. Right? As you guys can see, it all works. This is all about taking your game to the next level. Right? It's all about taking your game to that next level, where you're trying to be. Right? And just using simple strategies here. Right? Simply understanding market structure, exactly, and being able to put all this together. So you can literally, like, let's say if you're a scalper, right? How many people are scalpers on this call? I know I got some scalpers on here. Don't lie. Don't say you be swing trading. You really don't, right? So I can, like I said, I can take every single piece. So if I'm a scalper, I would take, let's say, the 1 hour as my basis, right? I take the 1 hour as my basis. So this is the 1 hour time frame. I identify this singular uptrend. I make my way down to, let's say, the 15-minute time frame. right? Let's switch that EMA, push that back. Let's say I only need back to 9. So now I got my scalpers. Fix this up, boom. Right? I got my clean uptrend. The moment price crosses, again, I got my 20, 30, 15, 10 pip move. Right? I got my nice pip move. For those who are looking for a bigger move, right? So let's say, for example, Great Britain, New Zealand, right? Hopefully you guys caught those sell moves on Great Britain pound. So this is perfect right here. So let's say I take this, go down to 30 minute. Check this out. I got my break of trend line. Break of trend line and EMA crossover. Right? Not only that, you're already within the directional change on your MACD. So now all confirmations are met. I can literally ride this all the way down, right? This was literally my lowest point before any real change. So from here all the way down here, over 1,300 pips. Look at that. 1,300 pips before any directional change. From this high, coming all the way over. 1,300 pips. From my entry here, from the break of my trend line, EMA under, price under my EMA, about 1,300 pips. Right? If you took the GA trade this morning, again, check it out. So let's say I'm on the 1 hour, and you can do this on any time frame, guys. Any time frame. Any time frame. Anything I teach you on one time frame, you can do on another time frame. So let's say I just take this nice uptrend move right here. So I take my trend line and I bring it up, right? So what's today? Today's the 12th. So this was the 11th. So I go down to the 30-minute time frame. Or matter of fact, take it even one step lower, 15. Look at that. The moment price broke, plus EMA, crossover. Look at your entry. Brick closes here. You got a 200 pip move to the downside. 200 pip move to the downside. Right there. You guys see that? Everybody see that? Right? And all I did was just take this singular uptrend right here. Boom. Came up, went all the way up with it, wait for the crossover, I get in for my buy or I get in for my sell. That's literally it, right? And you can do this all day, every day, guys. And check this out. All you had to do simply by adding one more moving average, right? Just adding one simple thing. Mind you, how many of you guys caught massive amount of value from the last session? Right? Now we just add one thing here. We put a moving average and look how much better it makes everything clear. Right? Look how much easier trading has now become simply by adding just a few things. Right? It's like I always talk about math, right? Math is one of my favorite subjects. I'm a nerd like that. Most people hate math, but it's like mathematics. So you're taking a test, and then your teacher comes by and gives you a calculator to take that test. Right? A teacher comes by and gives you a calculator to take that test. How much more powerful will you feel? right? How much more powerful will you feel now, knowing that you have this at your disposal? So just looking at this, now I know, right? And I can still analyze. You guys should still be able to see the market from, the perspective of, okay, from what everything Steve teaches me, right? I got my impulse, I got my correction, you have your impulse here. What's forming right now, guys? You should see it. What's forming right now? Everyone should see it. What's forming right now? Anybody? I know we got that like 30-second lag, so I tried. There you go. Right? You got your flag. See? There you go, guys. You got your flag. Y'all all perfect. Look at that. Look at that. Look at that. Look at that. So you know you have your flag here forming, right? So I'm on my 15-minute time frame. Right? So I got a flag forming, right? I already have my impulse. This is my impulse on wrinkles. Bearish impulse on wrinkles. I got my flag forming. So now all I need to do is wait for this. I need this, right? Right? I need this price action to happen over here. So whatever happened here, I need that. So you see how over here, right? You see how I moved down from the 15-minute. I caught the 15-minute flag. So you guys identified this 15-minute flag, right? So now I'm looking to jump in the market. I need to know when I can enter. Now I'm waiting, right? And notice the moment a red brick closed, right? The first time, you see? So right here, this was the pullback. That was your pullback. So the moment one red brick formed back under that EMA, to form under EMA, right? You can enter your sell. You enter your sell here. Your stop loss is right there, right? Stop loss is always above or below previous high, right? And guess what? You catch this entire move down about 90 pips right there, just on this flag. So now I just need the same thing that happened over here. What happened over here? I need the same thing. So I'm waiting for bearish brick to close below EMA. That's it. I'm waiting for that, and I'm pretty much waiting for my MACD crossover, right? You want to add extra confirmation? Wait for your MACD crossover right here. MACD crossover for your true sell. I get that over here, then guess what? I got my nice sell to the downside. See how that all works? You see how you guys bring that all together? Right? You see how that all comes together? Right? I'm waiting for whatever happened here. I need that to happen over there. Right? This is called multiple confluence, right? I'm already looking at pure price. I'm already looking at a flag. That's one confirmation. I got price closing below my EMA 2. I got price closing below my MACD 3. I got all those confirmations, right? All those things happening right there. Boom. See that? See how you put everything together? Now it takes away all that emotion. Now it takes away all that anxiety that you guys have, right? No, you're not trading in the flag, right? I'm showing you how to properly trade a flag, not trading inside the flag, right? So this is what you're waiting for. You're waiting for price to duplicate what happened over here. All right? So Are you guys paying attention? I just said you're waiting. You're being patient. What are my notes says? I'm waiting for a bearish brick to close below EMA. That's what I'm waiting. Just wait. Right? You have pure price going up. Why would I sell now? Just wait. Be patient. Right? So again, like I always talk about, practicing being patient is an internal thing. It's a personal thing. It's a personal thing. It's a personal thing. So I can't teach you how to be patient. That's something you must learn on your own. Right? I can't help you with that part. The only thing I can do is show you. I can give you guys the tools. I can't show you how to apply. I can show you how to apply, but I can't show you how to battle those internal things. That whatever it is that you're fighting. All right? So, this was, like I said, every session I will spend over the next few weeks for Renkos. After that, if you're enjoying this, wait till we get to Fibonacci. Once we plug all this in and then we get on Fibonacci, then your mind is really going to be, for all my Fibonacci addicts, for those who love Fibonacci, who swear by it, who think it's the holy grail, well, you know, I'm going to show you a few things that's going to, again, take your game to the next level, right? But that's in the next coming of weeks, right? So we're just going to spend time on Renkos. So now what we're going to do, now you guys know, if you're already trading Renkos perfectly, you watch last session. Make sure you watch last session in order to tie today's session. And then now you know, let me add an EMA. Now I can add an EMA. And the reason why you do an EMA and not a regular moving average, EMA as opposed to a regular moving average, right? So a regular moving average. So the difference is an EMA factors in price a lot faster than a regular moving average, right? It soothes out price a lot better. So you always want to do EMA. And as far as, you know, the price point, whether you do 9, 20, 25, 50, 80, 100, 200, right? It all depends on your goal, what you're trying to accomplish, whether scalping, intraday, long-term trading, you know, position trading, so on and so forth. All right. So now we're going to get into analyzing the market. All right, guys. I told you I'd spend about 30, 45 minutes. I spent about close to an hour talking about Renkos, and then we'll look at the market as a whole, and hopefully you guys take some good notes. I don't know. I don't use the web analyzer, so I couldn't tell you. I mean, I don't know. I don't use the web analyzer, so I couldn't tell you. I mean, what you can do is come to your trading view, use Renkos there, and then compare it, right? So for those who are on bounce back, for example, right? So let's say I bring up bounce back. So bounce back called a sell on Great Britain Swiss franc, right? So bounce back called a sell on Great Britain Swiss franc. So here's a trick. It called it at 133.473, right? So let's say I was on bounce back. 133.473. All right. Boom. So it called it on the 1 hour time frame, right? So let's go on the 1 hour time frame. So you see, this was the down move for today on bounce back. Right, so again, I would have identified, before this drop happened, I would have identified this uptrend, right? Now I'm on my 15-minute time frame, and then voila. This is how you could have gotten a better entry on bounce back. See how you can tie the two together? So sell 133.473. So sell 133.473. So that was up here before the break. I would have waited for the break. So once price closed, so once price below trend line and EMA, sell. See that? That's extra confirmation. and then you got your big sell. Because remember, Renkos is pure price, pure price. So there's no fluctuation, right? Some of you guys, when you're using bounce back, I see some of the comments, oh, I got wicked out or price retraced on me. Remember, no retracements here, right? There's retracements on Renkos. Obviously, you see the wicks, but it's not as dramatic on Renkos as it is on candlesticks and Hakanachi, right? So when it's telling you a downtrend is coming, a downtrend is coming. When it's telling you a buy is coming, a buy is coming. So this is one way you can like interuse both of them and use them in conjunction, right? But I don't have access to the web analyzer. I don't even know what the web analyzer is. This it? I've never used this thing. So anything you ask me about this, I have no idea. Like this is the very first time I'm even looking at this, to be honest with you. So right. Yeah, I'm lost. So I don't use this. So that's that. So, but I'm just giving you an idea. That's what you can do. That's what you can do. All right. I haven't used pivots. All right. Listen, guys, I haven't used pivots. I haven't used levels. I still haven't used Gold Cup. Don't tell Lasado that, but I haven't used Gold Cup. So I don't know nothing about these other softwares. All right. So let's get to it, guys. Regular session begins now. Let's switch back over and let's analyze the rest of this market for the rest of the week.